Announced in the recent Union Budget, a clutch of changes in the reassessment regime has come into effect from April 1. One of the prominent changes has caught the attention of individuals and corporates, and they have been rushing to their CA for more clarity. The change has extended the scope for Income Tax Department to reopen past assessments. In the earlier regime, misreported or underreported income in the form of an asset above Rs 50 lakh could have triggered a reassessment of the past 10 years. Now, the department can go back up to 10 years to scrutinize the finances of a company or an individual if they aggregate income or unexplained expenditure or entries in the book that escaped assessment over the multiple years is Rs 50 lakh or more. If the escaped income or spending is below Rs 50 lakh, then the limit for reopening of assessment has been halved to 3 years from 6 years. Unexplained expenditure includes money spent on a big event or occasion, expensive assets, and so on. If the department finds out that a taxpayer had an unexplained expenditure, it can send him or her a notice seeking an explanation and also may reopen the assessed return. The department can reassess the income or expenditure in case of an objection from any audit, information from foreign tax authorities, observations in a tribunal or a court order, besides relying on the data flagged by the Central Board of Direct Taxes' Risk Management and the Comptroller Auditor General of India. The department's Insight platform also helps tax sleuths hunt for potential tax evaders. The Insight portal processes data from various reporting entities.
The time limit was that of 4 years from the end of assessment year. In exceptional situations, then that time limit of 4 years could move to 6 years. What constituted reason to believe for an officer to reopen or reassess a matter has been interpreted by various courts. You cannot say that a reason to believe is equivalent to a change of opinion. The new provisions completely do away with the concept of reason to believe. The new provisions essentially say tax authority or the tax officer has information which suggests that income has escaped assessment. A reassessment proceeding could be initiated. The government has tried to clarify and be specific in terms of, what you mean by information. The timelines have changed, under the new regime, and that has been brought to 3 years and 10 years. When I say 3 years, it is 3 years from the end of assessment year. In exceptional situation, the timeline of 3 years extends to 10 years, and it has been categorically spelled out in what situation does that before the 10-year timeline can be triggered. First is that the assessing officer has to be in possession of the books of accounts and other documents which reveal that income chargeable to tax has escaped assessment. The second is that such escaped income should be represented in the form of either an asset or an expenditure in respect of a transaction, or in relation to an event, or an entry or entries in the books of accounts. And the value of all of this should exceed 50 lakhs. But the way the letter of the law reads today, this 50 lakh is to be computed cumulative and not per year. The second important aspect here is also that it's not sure whether this threshold of 50 lakhs would be each of the category, but I think this 50 lakhs has to be viewed cumulatively. So for the year ended 31st March 2020 and all the years prior to that will still be governed by the old regime.
As many as 5.52 crore individuals filed income tax returns during the assessment year 2018-19. Out of these, about 77 lakh people showed a gross total income below 2.5 lakh rupees, and 2.72 crore individuals disclosed income between 2.5 lakh and rupees 5 lakh. Income of 1.47 crore people was between 5 to 10 lakh rupees, while more than 52 lakh individuals had income between 10 to 50 lakh rupees. Nearly 2.1 lakh individuals had shown income between 50 lakh rupees and rupees 1 crore. And only about 98,000 people had a gross total income above 1 crore rupees. Going by the Income Tax Department's data, there were only about 3 lakh people in India with income of more than rupees 50 lakh in the assessment year 2018-19. Kuldeep Kumar, partner at Pricewaterhouse & Co. LLP, told Business Standard that considering the 10-year timeline, taxpayers should carefully make the required disclosures in their return forms to avoid notice. He said that taxpayers should also keep relevant documentary evidence related to their large financial transactions to avoid any inconvenience later on. Rahul Charka, partner at Economic Loss Practice, says that taxpayers should maintain consistency in the information submitted to authorities, like reconciliation between GST and IT returns before submission. He also suggests taxpayers to maintain documents of high-value spending, including those made on credit cards over the years, as well as records related to property deals.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.